Hello, my name is Sean Stutzman, and this is my presentation on analyzing a company's financial performance. Let's start off at the beginning. Financial statement analysis is a review of financial information found on financial statements and is used to make an informed decision within the business. This information can help benefit decision making internally and externally by giving the company areas to improve and to give stakeholders information. This can also be used to further help budget and decide what would be better to cut, and how to increase revenue to open up more opportunities for future investments. One of the ways you can go about analyzing is a horizontal analysis, which looks at trends over time on various financial statement line items. This is when a company typically compares over a period of time, 1 year, with the current sales to the previous year's sales. Using Banyan Goods as the example shown in the article, it shows a 20% increase in net sales for the current year over the last year. This information can be used to show that they are becoming a more successful business than in the previous year. Vertical analysis shows a comparison of a line item within a statement to another line item within the same statement. As used in the article, an example of this is for a company to compare a cash to total assets during a period. In the case of Banyan Goods did this with what percentage of assets was cash in the current year and found that 44% of the assets were cash based for that year. Solvency ratio implies that a company can meet its long-term obligations and will stay in business for the foreseeable future. The two main ways this is done is debt to equity ratio and times interest earned ratio. In debt to equity ratio, there is a relationship between debt and equity as it relates to business financing. In the case of Banyan Goods, it is found for every $1 of equity contributed towards financing, $1.50 is contributed towards lenders, which is a concern for Banyan Goods. Times interest earned ratio measures the company's ability to pay interest expenses on a long-term debt incurred. In the case of Banyan Goods, it can pay off its debt 21.5 times in the current year, showing a great ability to pay off its debts. This is my reference page. Thank you for listening to my presentation.